Hello everyone. Good morning from here. It's a very chilly morning at this part of the world. I think about 22 degrees Celsius, there about between 18 to 22 degrees Celsius we have at the moment from here. And depending on whatever time zone you are tuning in from, I also wish you a good afternoon and good evening. Welcome back, everyone. And first of all, yesterday I couldn't go live because of the rain and cloudy weather. My solar batteries just didn't hold up at all. But thankfully, we are here now, and sometimes that's how trading feels too. You get disruptions you can't control, and you just have to adjust and keep going. So I'm excited to be here with you. It's a chilly morning on my side, but the markets are really heating up at the moment. Though I do have some trades that I have taken already following the video I shared during the course of the weekend. And of course, if you have been a follower of my analytical approach, you must have been in some interesting position at this particular point in time. And for those who are joining me for the first time, you're highly welcome. My own name is Sheriff Daramola, and this is the Forex Morning Mastery session. We usually run this 3 times in a week: Mondays, Wednesdays, and Fridays. But due to me not showing up yesterday, this is more or less like a makeup session to cover our tracks. Hope you're all doing very well. Glad to have you here with us, and hopefully you will find some insightful ideas to take along with you into today's trading session. So let's move right into the business. How can we prepare for the moves that are coming? And of course, if we're already in a position, how do we intend to manage the existing trade? So as always, the first thing we normally do, of course, we want to quickly do a run of what is going on in the US dollar market dynamic. What is driving the sentiment in that particular market, and what are the things that we are going to be looking forward to this week, and how do we intend to strategically position ourselves for these big moves coming in this week. What you see on my screen is the DXY, that is the US dollar index. And of course, this is the first thing we normally do, keeping ourselves in touch with what is going on here, and then using that as a foundation to help us navigate the assets we are monitoring. So this week I didn't mention I'm monitoring 4 financial instruments. For those of you who saw my video during the weekend, I shared my thoughts on the USDJPY, the GBPUSD, and of course the XAUUSD. And this morning I will be explaining to you what my thoughts are as crude oil. So here on the DXY, what I did here was to take into account the character of price action since I think March or April thereabouts, just to have a quick look at how the US dollar has been faring. It's interesting to note that the dollar hasn't been doing the year. We've seen the price of the US dollar continue to drop significantly, and this has been around the rate cut expectations, the Trump tariff situations in the market. However, in the last 2 months, we saw signs that the US dollar was recovering and capturing the character of price since March. We have this descending channel, which explains the weakness of the US dollar. Now, since July, we saw some recovery. Price tested the support line of this descending channel right here, and it began to show signs of higher highs and higher lows, where we had a structure around that $97.50 level and the $97.25 area, where the last 3 to 4 months we saw how price has been unable to break through that particular area, making it a robust demand zone going into the week. But from what we see here since the week began, it appears that we have finally seen that breakdown of that structure since the week began. We saw price break down that demand zone, and it appears the dollar is declining. Currently, it is trading around the $97 area, sliding towards a 3 weeks low. The last 5 days, it has been down from recent high, and year to date it's been weaker than expectations. Now, some of the decline is being driven by expectations surrounding the fact that the Fed will be easing their monetary policy. What I mean by this, they intend to cut interest rate, likely starting soon. So basically the US dollar is under pressure. It's not collapsing, but momentum towards weakness, I would say. And that gives us good opportunity windows, especially if you believe some of that weakening is overextended or likely to bounce back. At the economic calendar, what are the things that, what are the upcoming events this week? What are the major factors to look out for? In fact, this week is laced with big US economic events, data points that will move sentiment and price significantly. We do not have anything yesterday, but today we are looking towards one of the major impactful events for the week, which is the retail sales data. Now, this retail sales data is more like giving us a picture into the consumer spending in the United States. It's in fact a big piece of the US GDP. So if retail sales are weak, it reinforces poor economic outlook. And if it comes in strong, it could complicate the Fed's narrative of easing their monetary policy. So we look forward to this one. It's coming in by 12:30 p.m. UTC. That's about 2:30 p.m. local time. And then we do not have any. So tomorrow we're going to be looking at the consumer price index. Is it? No, not consumer. That's for the United Kingdom. So we're looking at the Fed's interest rate decision. The Fed is the timing of this one is 6 p.m. UTC tomorrow. That's 7 p.m. local time. And the Fed is widely expected to cut rates by 25 basis points. So if you look at the consensus here, we are looking at 4.25 from the existing 4.5%. How they communicate about future rate cuts is going to also be very important. The economic outlook, I'm talking about inflation and employment, and this will shift expectations heavily. So if they are dovish, that is signal more cuts or express concerns about growth, that tends to weaken the US dollar further. If the Fed remains cautious or see upside risk, the US dollar may stabilize around where it is at the moment or even bounce back from this particular area. Then later tomorrow in the evening, we will be seeing the FOMC press conference. This is coming up immediately after the interest rate decision, and this is where nuances comes in. Market will be dissecting every word from the Fed chairman. They want to see how confident the Fed is about inflation coming down, what they see in the labor market as well, whether they think cuts will be aggressive or gradual. Now, if Powell sounds hawkish, that is, he remains concerned and staying high, that could limit the US dollar's weakness. But if he remains dovish, this could make the US dollar bounce back. Now, these are the two major events for the first half of the week. Then the second half of the week, on Friday, impact event that we are looking forward to this week. So a quick recap: we are looking at the retail sale in about 3-4 this market this week. Now let's move right into the chart we are looking at. So this week is quite interesting. I'm looking at 4 assets, and if you look at the bottom of your screen, I already took 4 trades already on this asset. But let's quickly start with the US crude oil market. Right? What is going on in that market, and why did I decide to buy? Now let's look at things from a fundamental perspective. Now price appear to be climbing since the week began for 3 straight sessions. We saw it on I think Wednesday, Thursday, Friday of last week, and at the moment price is currently trading around the 6 morning. Now why is the US crude oil gaining traction? Well, looking at things from a technical standpoint here, and what I did simply was to consider what is going on since June. So I'm talking about July, August, September. That's 3 months. We can see oil prices has been nosediving and taking a path of a descending channel in the process. As you can see here, we have the resistance line, and of course we have the support line here. Now within this range bound, we noticed that the last 1 month oil has been finding support. Yes. Now let me zoom in so we can see things clearly here. So we can see since July, since the beginning of August, the price of oil remained confined within a range that is between the $65.70 level and the $61.50 area, to emphasize a little bit of uncertainty going on in this packet. But where my center of focus is right now is the fact that sellers have been finding it difficult to break through the $61.50 level, making it a robust demand zone going into this week. Look at this support level. Since mid-August, it had continued to support buying pressure, as you can see here. And of course, we saw what happened on Friday last week. We saw some buy pressure resume around that area. And for the fact that price remains above this structure, I do want to feel confident that we could be seeing uptrend scenario. Now recently we just learned that Ukraine has been hitting Russia's key oil facilities, and that's raising fears of supply disruption from one of the world's biggest producers. And on top of that, with the Fed expecting to cut rates this week, traders are also betting on stronger demand. Now you will be asking, what does that simply mean? Well, remember, the US crude oil is a US dollar denominated asset, and if rate cut expectations are still lingering in the air, the value of the US dollar will continue to drop. And if this continues, the dollar becomes cheap for other currencies to buy. And if that happens, a lot of investors will want to start buying the crude oil, keeping it in their stocks, and this technically will increase the demand for crude oil. So this increases the chances that the crude oil will rise. It has a nice tailwind both from supply and demand hopes. Now let's scale down into the 1 hour time. Let's scale up into the 1 hour time frame to see what has been going on since the beginning of this week, how the market has been behaving around the US crude oil market. Now zooming down into the 1 hour time frame, this was what I was able to come up with yesterday. Unfortunately, I wasn't able to share this with you. I first of all identified a range here. We had this beautiful range, though the week started on a strong bullish note. As you can see here, started at around the $62.28 level, then found resistance somewhere here, consolidated for a while, and as a result of this, I decided to buy the breakout of that resistance line. And since I placed this trade yesterday, if you look at the bottom of your screen, you'll see that the trade is still running. Price actually moved about 58, 60 pips thereabout before it snapped back into the entry point. I still have the trade running. I think it's still in a loss. I think around break even thereabout, but I'm still hopeful that the bullish expectation is still very much there. So if you do want to be part of this move with me, buying above this $62.78 level is really making a lot of sense at this point in time, considering these fundamental factors I talked about: supply fears due to the fact that Ukraine continues to strike key Russian oil facilities, and the hopes that demand is going to rise due to a weaker US dollar. So buying above this structure is looking promising for me. And of course, you do want to be having a wider range of stop loss, maybe around 45-50 pips of stop loss, because we are likely going to be seeing some high volatility as markets tune into the Fed interest rate expectations. Now, another one here is we do have a resistant line somewhere here. Let me bring my line chart. I think we have something around the $63.20 level. So I do want to be marking that level out. It could be welcoming more buy ideas if price action does break out and retest that particular structure, right? So I would like to place a buy stop order above the structure. One thing we need to understand here is that as soon as that buy gets triggered, we want to be moving the stop losses on the first buy position to maybe break even or some small profits just to secure that first one. We don't want to expose our positions to too much risk, right? So I already placed a buy stop order above the $63.20 level. So let's see how this market is going to play out as we continue to monitor price action as market anticipates the Fed's interest rate decision. So that is my look on the US crude oil, and hopefully let's see how things hopefully is going to happen all in our favor. Now, one thing I would also like to say here is, despite the fact that we're looking bullish, what are the conditions that will make us consider sell? Now, if I am going to sell at this point, maybe we don't know what could happen. Maybe there could be some background news about the fact that background news about data that could give the dollar some hope. And if that is going to be the case, the US dollar may rise back. It could affect the price of crude oil. Where do I think will be most appropriate to sell? Well, for me to sell at this point, I will just need to see price take out the level where the week started, which is the support line here at the $62.28 level. We want to be selling it after confirmations. I want to see some retest of structure on lower time frame before I jump into that sell. Now, if we are going to be selling, let's be mindful that we are right above a support line I shared with us earlier, and which could so we need to always move our stop losses accordingly as price moves in that direction, right? Because we could still find support from this area. So that is basically what I'm looking at on the US crude oil going into this week. So if you have any questions whatsoever, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let me take a sip of water, and I will be right back after the break. Stay tuned in. All right. So, in the absence of no questions, I guess we are all on the same page. So, with that said, I will be moving on to the next assets on my watch list for this week. So the next asset I am looking at for this week is the GBPUSD, that is the pound sterling against the US dollar. And of course, this is going to be on this particular asset. I think I went on to go into details about what is really affecting this market from both technical and fundamental perspective. And I came up with a structure going into this week where I did have this range bound. I said price confined between the 1.358 and the 1.35150 after breaking out of that descending trend line. And I did went on to say that I will be considering buying the GBPUSD as soon as the break of the resistance line happens, or selling if the breakpoint line happened. And look at what happened. Of course, price did break out and even gave us some confirmations as we saw a breakout retest of the structure to confirm that uptrend move. And I do hope you are able to take advantage of that opportunity. It was quite a simple setup to capitalize on. So at the moment, the GBP is pushing to its 2-month high as it is after we saw some good UK jobs data this morning, which came in, I won't say good, I think it came in as expected. Let's look at it together here. So it came in this morning. So we saw the average, hold on a second, I think I have to reset this. The actual data are yet to be imputed here. So let me refresh this page and let's see. Okay, so here we have it. So the average earnings excluding bonus came in just as market had expected, 4.8%, 4.7% respectively, as you can see here. Then we also saw the